All right, so let's get right into it today. We're going to be going over a lot of market happenings and hopefully give you a little bit of an edge, as we go into the new year. So we got a pretty diverse mix of sources here,
Yeah.
Everything from stocks to crypto acquisitions, expert predictions. Think of it as a
Cheat sheet.
cheat sheet to sounding brilliant at that
Exactly.
coffee break or reading.
I think what's really fascinating about this set of sources that we have is it's kind of a mix of, uncertainty and opportunity as we end the year.
Yeah.
It's really a dynamic landscape right now.
Absolutely. So why don't we unpack this a little bit,
Yeah.
starting with the stock market.
Sure.
It seems like major indexes are giving us a bit of a mixed bag.
Yeah, you're absolutely right. We're seeing, slight dips in the S&P 500 and the Dow Joneses. But the Nasdaq Q took a sharper tumble,
Okay.
But what really stands out, I think, is the Russell 2000, focusing on smaller companies.
Dropped over 1%, suggesting that investors might be a little more cautious about riskier assets right now.
Yeah. That makes sense given, all the talk about
Right.
economic uncertainty and,
Exactly.
we're all feeling it a little bit.
Yeah.
So, speaking of volatile topics, let's go to crypto. Bitcoin saw a small bump,
Yeah.
but Ethereum seems to be stealing the show
Yeah.
with a more substantial gain.
I think that really aligns with what we've been seeing, the trend, over the last several months, where Ethereum is really outperforming Bitcoin.
Okay.
And, this is because Ethereum's increasing utility in decentralized finance and the booming NFT market. It's really becoming more than just a cryptocurrency.
Yeah.
It's a platform for innovation. It's attracting both developers and investors.
So while Bitcoin might be the gold standard, it sounds like Ethereum is becoming more of the Swiss Army knife of
You could say that. Crypto world.
Yeah, it offers a wider range of applications, which is driving its current momentum.
Okay, so, some news that unfortunately shook the market. The tragic Jeju air crash
Oh, yeah.
in South Korea involving a Boeing aircraft is sending ripples through the investor world.
Yeah, I mean, this kind of event always have an impact on investor sentiment. I think there are concerns about potential implications for Boeing's future orders and, the scrutiny they might face from regulators. And of course, what it means for their bottom line. It's a stark reminder of how unexpected events can quickly shift market dynamics.
Yeah, absolutely. So speaking of things that can send the market on a bit of a roller coaster, Treasury yields have been making some interesting moves lately. They hit a 7-month high before dipping slightly. And I know yields might not sound like the most exciting topic,
Right.
but they're actually super important for anyone who's interested in.
They are. Absolutely. To put it simply, Treasury yields directly impact borrowing costs across the board. When yields go up, it becomes more expensive for everyone.
Yeah.
Individuals looking for a mortgage to giant corporations seeking funding for new projects, higher borrowing costs can slow down economic growth, which is why investors are paying such close attention to these movements.
Okay.
In fact, the firm Evercore ISI has even warned about specific yield levels that they believe could trigger a significant wave of market volatility as early as 2025.
So you're saying we really need to keep an eye on these yields because.
I think so, yeah. I think they're a bit of a canary in the coal mine for the overall market.
Okay, well, let's switch gears and talk about the acquisition frenzy that seems to be sweeping across various industries. It feels like every day there's news of another company gobbling up a competitor or expanding into a new market.
Yeah.
What's going on?
I think what's fascinating here is that these acquisitions give us a glimpse into where companies see the most potential for growth and how they're adapting to this rapidly changing landscape. They're like puzzle pieces revealing the bigger picture of industry trends.
Okay, so let's, piece together this puzzle a little bit.
Yeah.
Starting with the semiconductor industry. Littelfuse, a global manufacturer of electronic components, is making a big move by acquiring a wafer fabrication plant in Germany.
So that's a clear signal that the global chip shortage is still a major concern for companies.
Wow.
They're scrambling to secure their supply chains and ramp up production capacity. I mean, remember how hard it was to get your hands on the latest gadgets last year?
Oh, yeah.
I mean, this acquisition highlights that the demand for semiconductors is still outpacing supply.
Okay. And speaking of, keeping up with consumer demand, Syntiant, a company specializing in AI processors, just acquired Knowles Corporation's MEMS microphones division.
Okay.
That seems like a pretty strategic move given the explosion of smart devices.
Absolutely. It shows that Syntiant is looking to capitalize on the growing demand for advanced audio solutions and everything, from smartphones and smart speakers to wearable devices. It's all about integrating AI capabilities into everyday consumer electronics.
Okay. Moving on to the healthcare sector, we see Immedica acquiring Marinus Pharmaceuticals.
Yeah.
This seems to indicate continued interest in specialized healthcare solutions.
Yes, and I think beyond this particular acquisition, we're seeing a broader trend of companies investing in personalized medicine and targeted therapies. It's a fascinating area where advancements in genomics and data analyses are really driving innovation.
Okay, so it seems like there's a lot of activity across a variety of sectors. We also have Altus Group selling off its property tax business, O2 Gold expanding its gold mining footprint, and Stagwell diving into digital markets in the Middle East.
It is quite a whirlwind of
it's a whirlwind
deals.
of deals.
I think what's really striking is how these acquisitions, across such diverse sectors, offer these valuable insights into how companies are responding to evolving market demands and where they see opportunities for growth. They're betting on the future, and by analyzing these moves, we can gain a better understanding of what that future might hold.
All right, so we've covered a lot of ground.
Yeah.
Everything from fluctuating stock markets and crypto trends to these unexpected events and a flurry of acquisitions.
Yeah.
But let's go a bit deeper and explore some of the key sectors that are shaping the investment landscape.
That sounds great.
As we move into the new year.
I'm particularly interested in the tech sector.
Okay.
Where innovation is moving at breakneck speed, and also the energy sector, which is facing a period of significant transformation.
Okay, perfect. Let's unpack those sectors in detail after a quick break.
Sounds good.
All right.
The tech sector is always buzzing with activity, and the recent Syntiant acquisition we discussed, is a prime example of that. It really points to a larger consolidation trend as companies seek to bolster their capabilities and stay ahead of the curve.
Yeah, it's like a high-stakes game of chess where each move can have a ripple effect across the entire board.
Exactly. And while there's enormous growth potential in tech, companies also face their fair share of challenges. Regulatory scrutiny is increasing as governments grapple with the implications of artificial intelligence and data privacy.
Right. And let's not forget about the ongoing supply chain issues that have been plaguing various industries, including tech.
Securing reliable sources of components and materials is crucial for any tech company that wants to scale up production and meet the ever-growing demand for their products.
Okay, now let's shift our focus to the energy sector, which is undergoing a pretty dramatic transformation. What are some of the key factors shaping the outlook for energy investments?
Well, the energy sector is facing a confluence of factors, including geopolitical tensions, regulatory changes, and the urgent need to transition to more sustainable energy sources. It's a complex landscape with both risks and opportunities.
I imagine the ongoing conflict in Ukraine and the volatility in oil prices are making investors a bit nervous.
Yeah, geopolitical events always have a significant impact on the energy sector. And while the shift towards renewable energy is gaining momentum, fossil fuels still play a major role in the global economy. Balancing energy security with environmental concerns is a challenge that policymakers and energy companies are grappling with worldwide.
So for investors looking at the energy sector, it seems like the key question is, how will policies affecting renewables and fossil fuels reshape the sector's long-term outlook?
Precisely. It's a sector that requires careful consideration of both short-term market dynamics and long-term trends.
Now let's bring it back to the U.S. and talk about those Treasury yields that we mentioned earlier. You explained how they impact borrowing costs, but what does that actually mean for the average person?
Well, think about it this way. If interest rates rise
Uh-huh.
because of increasing Treasury yields, it means you'll likely pay more for a car loan, a mortgage, or even a credit card.
Yep.
It also affects businesses, making it more expensive for them to borrow money to expand or invest in new projects.
So rising yields can have a ripple effect throughout the entire economy.
Exactly. And if those yields hit certain trigger levels, as Evercore ISI predicts, we could see a significant increase in market volatility. It's something investors are keeping a close eye on because it can signal a shift in investor sentiment and potentially lead to a market correction.
Okay, so it's not just about numbers on a screen. These yields have real-world implications for everyone.
Absolutely. They're a key indicator of the overall health of the economy and can provide valuable insights into future market trends.
Speaking of global trends, it seems like the U.S. market is not an island.
Right.
Events happening in other parts of the world also have an impact on our financial landscape.
That's right. We live in an interconnected world, and global markets are more intertwined than ever before. Events in Europe, Asia, and even emerging markets can send shockwaves through the U.S. financial system.
For example, the economic data coming out of China, which is a major player in the global economy, can significantly influence investor sentiment here in the U.S.
And the Eurozone's economic performance also has a ripple effect on global markets. It's a reminder that investors need to pay attention to what's happening around the world, not just in their own backyard.
So with all these challenges on the horizon, inflation, geopolitical tensions, regulatory changes, and global uncertainties, is there any reason to be optimistic about the future of the markets?
That's a great question. And despite all these challenges, I would say there's a sense of cautious optimism. Remember those acquisitions we talked about earlier? They show that companies are still willing to invest and innovate even in uncertain times.
And wasn't there a bit of a silver lining in some of those market dips we discussed?
Yes. When the market dips, it creates opportunities for savvy investors to buy stocks at a lower price. It's all about recognizing those opportunities and managing risk effectively.
Okay, so it's not all doom and gloom. There's still potential for growth and profit.
Absolutely. But as always, knowledge is power. The more informed you are about the forces shaping the markets, the better equipped you'll be to navigate the ups and downs and make sound investment decisions.
That's a great point. And that's exactly what we're trying to do here.
You
know, give you the insights and knowledge you need to feel confident and informed about the market.
Exactly. It's about empowering you to make sense of the complex world of finance and take control of your financial future.
So as we wrap up our deep dive into the markets today, let's recap some of the key takeaways for our listeners. What are the most important things they should remember from our conversation?
Yeah, so first things first, those Treasury yields, we talked about how they impact borrowing costs.
Right.
But we got to keep an eye on them.
Yeah, definitely. I think they're a key takeaway because they can really be seen as kind of a leading indicator of broader economic trends. And speaking of indicators, those acquisitions we unpacked, they offer valuable clues about industry trends. And where companies are placing their bets for the future.
Yeah, it's like you're getting a sneak peek into the minds of the little major players.
Exactly. They're making strategic moves based on their analysis of the landscape. And we can learn a lot by observing those moves. So we got to watch those yields, decipher those acquisitions, and keep in mind that even amidst challenges, there's always room for optimism, especially in sectors like technology and healthcare.
Absolutely.
Where innovation is driving growth.
A lot to be excited about in those sectors. And remember, even with market dips, savvy investors can find opportunities to buy low and potentially see great returns.
So it's all about staying informed, being adaptable, and recognizing those moments where a potential risk could turn into a rewarding opportunity.
Exactly. Knowledge is power, especially when it comes to navigating the complexities of the financial markets.
Well said. So as we wrap up our deep dive today, I want to leave our listeners with a thought-provoking question. With all this information in mind, what opportunities or challenges are you most interested in exploring further? What piques your curiosity? What aspects of the market do you want to understand better?
Yeah, and we encourage you to continue the conversation with us on social media. Share your thoughts and engage with other listeners. The more perspectives we bring to the table, the richer our understanding of the markets becomes.
That's right. It's all about learning from each other and navigating this exciting, ever-evolving market together. Thanks for joining us on this deep dive. We hope you found it insightful and engaging and maybe even a little bit thrilling.
It's been a pleasure sharing these insights with you. Until next time, happy investing.
And remember, stay curious.